Hey guys, Steve Simpson here with Central Florida Property Management. Hope everyone's doing well. I can't believe it is already tax day, April 15th, and we are firing off our Q1 2026 market update. So let's get going. Overall, I would say this is a positive development just across the board, both rentals and sales. So I think overall we should be optimistic about where things are going. But let's get into the data. Okay, so median home price up about $5,000. That's across all asset classes, both single-family condos and townhomes. You can see these are year-over-year metrics. We've talked ad nauseum about the difference between the asset classes, single-family versus condos and townhomes before. Not surprisingly, still the same sort of deal where I would imagine the bulk of this $5,000 increase, and just to make sure I'm specific here, that's from the end of 2025. So December 2025, median home price was $380. Now it's $385. I'm guessing that 5 is basically all from single family. It just seems to be the dominant asset class in terms of kind of performance. But not a material amount, a little bit, but it's better than nothing. Inventory is also up. Inventory is up about 600 units from the end of the year. That's to be expected due to the seasonality of the housing market, market timing, what have you. Basically, there's a ramp of not just transactions, but listings that usually start, call it late January, ramp up to the middle of the year, where we have the most transactions, most listings, so on and so forth. So this is to be expected. It's a good sign that it is happening what we expect. So that's good. Drilling into the sales number, I do not have good data for this from the end of the year. I would imagine this is higher. Again, this is year over year, the negative 2%. I would expect to see this grow when we do our Q2 and Q3 quarterly market reports. So, again, this is not super useful because I don't have last month's data. Moving into days on market. Days on market is down to 54 as a median days on market for the Orlando market, down from 62 days on market at the end of the year. Not a super material amount, but 8 days, it's not nothing. It definitely shows kind of what we're seeing from our end in that things seem to be moving faster, more transactions happening, more listings, what have you. It feels like the sales side of the market is de-thawing. It felt like it was stuck. And now it feels like there's some lubricant coming and it's getting kind of worked up. Pause real quick to just say I've gotten some calls lately, just so all of our clients know we do sales as well. So all of our property managers are licensed real estate agents. We've helped dozens, if not hundreds of clients buy and sell rental properties, whether it's your rental property's run its course and you're ready to not be a landlord anymore, or you want to add on to your portfolio. All of our property managers can help you do either. So if you're interested in buying or selling property, please reach out to them. They're a wealth of knowledge. So again, what we're seeing from the sales side is backed up by this data in terms of it just feels like the market is cooling, or I'm sorry, not cooling, is defrosting, thawing out, moving, just busier than it was 3 months ago. Again, some of that seasonality, I tend to think some of it also is, the market's been stuck or in the process of being stuck for going on 3 years, 2.5, 3 years. And I have to imagine there's a decent amount of people out there that were just waiting, and maybe they're just getting impatient. They're just like, okay, I want out of this thing, and the market has not done what I want it to do, but I'm just ready to sell. Their expectations of pricing are better or more in line with actual market. There's other things going on in terms of their personal finances or some of the stuff involving rental rates relative to mortgage rates. Whatever the motivating factor is, it seems like people are trending towards transacting, which I think overall is good. We need properties moving in the market. So there's my little soapbox speech on that. Okay, moving in the rental space. Average rental price is up about $5 in terms of looking at all home types. Nothing crazy. Again, you see the year over year, it's actually still down. We've talked about this before, that the overall market has come down, really probably the last 18, 24 months. The good news is that it's up slightly, $5 a month from the end of the year. Again, not super surprising given the seasonality of the market. Available rentals is fairly flat. It was down about 400 units. It was 3524 at the end of the year, down to 3153. That sounds about right. Doesn't seem crazy to me. Again, there's probably more interest. Prices are rising, and inventory is falling slightly, not a ton. Looking at the individual home types, pulling up houses first. Again, always the dominant asset class here. Average rent in houses is actually up almost $100 from the end of the year. Again, a lot of seasonality involved with that. You can tell year over year it's only up $45. Still, it's moving in the right direction for what we want at least. Days on market is down from 61 at the end of the year to 55 now. And just looking at the charts here, the light blue is last year, dark blue is this year. I would expect this to probably keep going up a little bit. I don't think we're going to see huge, double-digit rent increases, but I do think we'll see some degree of a rent increase. What's nice, what I like especially about this, is that it seems to be going back to the normal trend of the market in terms of basically having highs, call it, starting really in late March through the summer, declining in the September area, and then bottoming out, call it between Thanksgiving and the middle of January. As you can see, if you look at prior videos, this cycle was kind of shifted a few times, and I think it's good that it's getting back to quote unquote normal. To me, that feels like a positive indicator that maybe the market is, it went way up, kind of came down. Maybe it's kind of getting to homeostasis, which I think is good, is predictable, all that stuff. Okay, moving on to townhomes, kind of my second favorite asset class. We will see that their rent is also up about $100. This was $2,100 at the end of the year. You can see it is down year over year, $90, which again, not surprising given the asset class, what it's been doing. Days on market is down slightly. It was 66 at the end of the year, down to 64, pretty much the same. Again, I feel like if you break the markets into three, housing is the strongest. Townhomes are pretty much like just kind of slow and steady, moving along. Condos, kind of a dumpster fire, even still. Talked about that before, and the data kind of pans that out as well. The graph on this one, I'll be interested to see if this starts moving up. As you can see, last year it was all kinds of crazy. I have a feeling this will move up. Maybe not as much as housing or single family homes, but I don't think it'll stay flat or decline, over the next, call it 6 months. Finally, condos and apartments. We don't do apartments, but condos. Good news is the average rent is actually up about $50 from the end of the year. It's still down 75 from year over year. But I think that's, again, it's seasonally appropriate, but we'd like to see more, but at least it's moving in the right direction. Hopefully a year from now, this number is reversed or maybe even beyond that. You can just see here how much, it's not good. It's not pretty. We've talked about this before. I wanted to show a couple other data points that we have, some things that we track. So this is our renewal rate. Actually, let me do days on market first. So this is our median days on market based on market. So basically, this is what is the median days on market if a property goes on the market in this month, right? And as you can see, I think the key point here is that it seems to be trending down from last year, which is what I would expect. This 10.5 seems a little bit low, but things are definitely moving faster from what we're seeing. We're getting properties with deposits on them, basically a holding deposit taken off the market quicker than usual. We seem to be getting more interest in showings and more showings. All good things. I think, again, some of it's seasonality, but I do think some of it is the market just kind of returning to a normal state. Hopefully things continue doing that. Another data point was our renewal rate. So I think because of a variety of factors, people are staying put more than usual. I think for a variety of reasons, if people have to move, they're moving, but if they want to move, they're probably staying put. Now, this is assuming rent is being kept at the offer being made to them to renew is kept at the market rate. I cannot stress this enough. We get some clients that are just adamant that their expenses went up, so therefore I have to charge more money. But if the tenant can get the same or equal housing at a lower price, they don't really care if the owner's expenses went up. They care about what their expenses are. So I can tell you this data is mostly based on being able to present the tenants with market rate rental offers, not above, basically. So, but the good news is, again, looking at prior data, a little bit higher than last January, significantly higher than last February, higher than last March. April's data is not complete, so it's a little bit not unreliable, but it's trending in the right direction. Quarterly, you can see we were almost 10%, I guess 8% above Q1 of last year. And then looking at the end of the year, I mean, these are good numbers. 81%, 76%, 90%. Historically, rental properties, throughout the country, renewal rate's about 66%. So basically, people move once every 3 years. I think this is a good thing for landlords. You want someone staying in your property. There's obviously a lot of costs involved with turnover in terms of just getting the property back on the market. Any repairs need to be done, lost rent, all that sort of stuff. And if the rent you're going to get is market anyway, then you may as well have someone who's performing stay in the property paying you rent. So this is good. Like I said, when we started, all good things: higher renewal rates, lower days on market, prices stabilizing, if not going up in some areas, seasonally adjusted. All good things. So if you guys have any questions, please leave comments below or email me or your property manager. This is one of the most positive ones of these I've done, I think, in the last 3 or 4 that I've done. So very excited about where the year's going, and hopefully you guys are as well. Take care.